Good morning, it's Thursday the 21st, I'm FX Plur, I'm back in the park because Colin had a flea treatment and can't be trusted around the rivers. UK inflation fell to a 4-year low as consumer prices came out at 0.8% year on year, so it looks like prices won't be a problem for the UK consumer anytime soon. We're more likely to hear central bankers concerned about deflation, which of course might invite more questions about negative interest rates. Following Tuesday's employment report, inflation data has added concerns over the post-lockdown recovery, which Chancellor Sunak has said could now take longer than originally expected. No great surprises there, but quite how grim the outlook might be is currently masked as the government is paying the wages of close to 10 million workers. So we should brace ourselves for further unemployment around the October deadline for the furlough scheme. So far this week, sterling has held its own against the dollar, trading around the 122.20 mark. But the good news about Eurozone funding saw the euro rally and sterling euro slip to 111.30 yesterday. Over in the US, consumer spending that makes up about 70% of the US economy. That was behind the aim of providing about $1,200 to every household in the country. The aim there, of course, being to keep the consumer active. It's not been quite as effective as the Treasury had hoped, though. And with several states likely to remain in lockdown for some time to come, there are only a handful of states over there where things could get back to normal anytime soon. So hopes of getting the economy back on track over there should probably be shelved till at least the fourth quarter. The FOMC minutes yesterday showed the Fed has done pretty much all it can in the short term, and the focus is switching very much towards financial stability of the country. Powell is also looking at limiting the bank dividends. That's something that the UK government did a few weeks ago. The idea there is to keep liquidity levels higher than normal in the banks, which should hopefully encourage them to increase lending. However, in the UK, banks were reluctant to adjust their lending criteria and start putting any of that money to work until the government caved and guaranteed 100% of some loans. So we'll have to see how Powell handles that one. The Euro's had a pretty good week so far. Granted, it was largely a knee-jerk reaction from the proposed recovery plan. Hang on, I just need to turn around. And getting a little clarity on the loan or grant discussion. The EU can only lend to member states, but the funding challenge is whether or not they can get funds dispersed via the European Commission, as that should be a way round of allowing grants to be dispersed. It's still unclear on how that will be appearing on the European Commission balance sheet, but the progress there is the crux of the euro reaction. Yesterday, euro dollar reached a high of 110 as short positions were squared away, but there's still a long way to go before the market feels comfortable to go long the euro. Right, that's it from me. I'll see you again tomorrow. Have a great day.
If you do not have a clue, then just tweet through and ask FX Blue.